From the station that's on your side, this is Channel 7 News Good Morning Arkansas.
We're going to have Scott McElmurray with Bank of Little Rock Mortgage. He's here to share if it's better to rent or buy a home and what really the market is doing right now.
Right.
If it's that time that maybe you have been renting, maybe it's the time to buy, or vice versa, or maybe you're just looking to buy your first house. He'll kind of go through some of the do's and don'ts and some things to look out for.
Interest rates, you got to always look at what's going on, and they keep up with that every day. Also, we have Scott McElmurray in with Bank of Little Rock Mortgage here to talk about, is this the time for you to rent or buy, and kind of the differences in what that's going to cost. Welcome back, everybody. Scott McElmurray with Bank of Little Rock Mortgage is here to talk a little bit about, is it better for you to rent or buy a home if you're sort of on the fence? Sure. And I think a lot of people are on the fence, right?
I think so right now.
Exactly. Absolutely. So is this a good time to jump in and actually buy it?
It's always a good time.
Of course.
Says the mortgage guy, right?
That's what you've got to say, right?
Exactly. And it is.
Yeah.
There's a variety of factors to consider, right? So right now we're looking at somewhat of an increasing interest rate environment. They've been fairly stable, but from a historical standpoints, I mean, we were at a high of 18% in the 80s, a low of about 3.3 in 2012. So at about 4 3/4, 5%, we're still historically low, right? You have another factor that at least in Arkansas, we're below national averages from a sales price standpoint, but we're starting to see increases in prices throughout the state. So we're coming into kind of that buying season right now, and certainly nationally there's concern about inventory, and that's starting to creep into Arkansas a little bit with the amount of homes for sale. And so as you have more demand for those homes and less supply, that could increase the prices as well. So we're also expecting rates to increase kind of throughout the end of toward the end of the year. So those factors combined make now, if you're even interested, it's probably time to get a little bit more serious about it, because just a 1/4% increase in rate erodes your buying power about $5,000.
And makes a big difference
over time.
Combine
that with potentially higher priced homes, and it can get a little bit more expensive.
It is time to get serious if you're thinking about it. Okay, let's talk to renters about how much, how many expenses they incur renting.
Well, when you look at, there was a national magazine that came out with a piece that said most homeowners spend about 15% of their income on their mortgage payments. Most renters spend about 30% of their income on rent.
Double that.
So when you look at least like in Little Rock, for example, your average 3-bedroom apartment is going to cost you anywhere from $800 to $1,000 a month. You're going to get about 1,000 square feet. When you combine that and say, okay, if I'm going to pay $800 to $1,000 a month and I buy a house, what am I going to get? You're really going to get about $125 to $150, maybe $160,000 house, which is going to give you 1,300 to 1,800 square feet. You get a yard, you get all those nice things, and you're building wealth. And so that's the one thing that you look at. Now, the drawback obviously is that you have additional expenses. With a home, you're your own landlord. So any maintenance that's necessary.
There's nobody else to call.
You do have taxes that you have to pay. You have insurance that you have to pay to make sure it's insured. But all of those things are in that payment that you compare it to rent. And again, you're still building about 1.5% to 2% of your loan amount per year is what you're building in wealth, because that's the amount that's going to principal.
Building that equity.
Absolutely.
Yeah, and you're not building anything renting.
And even if you looked at, okay, I'm going to, a comparable home with 1,000 square feet to what I'm paying, to what I get, what I'm renting, is about 25% cheaper as far as a monthly expense, especially when you factor in the wealth that you're creating. Right,
there you go. Okay, so they want to buy, but now they're thinking, I don't have money for a down payment. How do you answer that?
Well, that is one of the major misconceptions out there. Most people think that you've got to put 10% down, which is absolutely not true. The average amount of down payment, especially for first-time home buyer, has been 6% nationally. There are many programs that allow you to put 3% down. There's other programs that actually allow you to maybe not put anything down. The one that's most far-reaching is the 97% loan. And so you can many times get your closing costs paid inside the contract, ask for the seller to pay those closing costs. So really all you have to come up with is 3% down.
Okay, so it's kind of a misnomer or a myth that you need to have 10% or more for all those other costs. Okay, what other type of loans are out there, like a USDA?
Well, we mentioned some of the 100% loans. Okay,
right.
So some of those loans become somewhat income restrictive, meaning that you can't make too much money to qualify for those programs. You mentioned rural development. That is primarily associated with rural properties, but you'd be really surprised at what areas qualify in the state of Arkansas for rural development. It's not, you don't have to have acres.
Right.
Yeah, exactly. So there's a lot of areas like that. So that would allow you to have 100% financing. If you're a veteran, there's not a better loan, I don't think, than the VA loan for a veteran, because you can get 100% financing there. A local state bond loan program, the Arkansas Development Finance Authority offers, that you can put down payment assistance in combination with that loan, which essentially can get you 100% financing as well.
And you guys can help them, find those options that are out there. And then quickly, you've got tools on the website so that we can kind of figure out what we can afford.
Yeah, and the best place to go is maybe look at a calculator first, right? And so you're looking at, most people are going to know in their budget what can they afford. The thing to be careful about is when you go to a calculator, all you're getting is principal and interest, right? So if you say, I can afford $700, and you go and you say, well, you plug in $700, and it says, well, great, I can borrow $150,000. Well, you got to factor in taxes and insurance, and those are going to run between 1% and 2% of the loan amount. So, for example, a $100,000 loan is probably going to, principal and interest going to be about $550, $540. But you're probably needing to add another $200, $150 to $200 to that to know what your actual payment is.
Okay, go to the website, blrmortgage.com, get those tools, or just give them a call and get some good advice. Thank you, Scott. We appreciate it.